The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.
Hello and welcome to The Trade. It's fantastic to have your company. To kick off this new week, my name's Kyle Rodder. Well, we're going to get a currency point of view to start things for this new week. And for that, Duncan Cooper from ACY Securities joins me now. Duncan, great to have you on board once again. Okay. A lot of excitement in the currency world, it has to be said. We've been homing in a lot on the US dollar recently, where it could go next with, I guess, the myriad of things that are driving price action at the moment. So let's start with the US dollar index quite naturally. What are you seeing here? Because as I understand it, maybe starting to show that, pickup that we've been sort of calling over the last few weeks.
Yeah, sure. I mean, over the last 6 weeks when we've been talking, I've been saying maybe we're going to get support down here on weekly support, 101.28, and even down to the 100 level. And we had a very positive week last week. Of course, over the last 2 weeks, we've had the FOMC statement, the US job figures. Last week, we had the CPI data, the PPI data, and no real negative data, really, I don't think. And ultimately there, we may have been forming a base. And, you know, if we drop down to the day chart, we might just see a little bit of a closer look at that base that we've been forming. So definitely moved up to a higher top last week. Quite impulsive last week by the end of the week, Thursday, Friday. And we're almost, halfway up that range. So I'm anticipating that, higher bottom forming, we could be moving up. And over the next month, we could see maybe a revisit to the top of the range. That's what I'm anticipating. And with that in mind, I've been very much focusing on the pairs to the US dollar with our clients. And, is that the bottom of the year maybe? Who knows? I mean, we could stay in a range for quite a while. If interest rate differentials stay very similar between pairs, we could be range bound, or we might be starting to see a bit of a revival there on the US dollar. Yeah. What are your thoughts?
Well, I mean, I keep thinking of this probably 8 or 9 months where I was at a conference last year and everyone was bullish the US dollar and positioning was incredibly long US dollar. It was right near the top. It seems like some of this positioning has reversed a little bit and this higher for longer narrative might be starting to support the US dollar. So maybe there's a scope for some upside here and those technicals look pretty compelling. But maybe we'll get to the EURUSD because so much of it will depend on where that pair happens to go and maybe take us through the key levels you're looking at right now, because clearly that interest rate story is pretty supportive of the currency. But, well, again, we're seemingly at a fairly key level here.
Yeah, well, this is actually the same chart I showed you last time. Just wanted to have a look at where we were 2 weeks ago. And last time we discussed this, we were struggling at the 110.33 level. And over the last 2 weeks, we have been still testing and struggling there. But we did have its final test last week at 110.33 and managed to close below the 109 level. So if we drop it down to the day chart there, what you'll start to see is that we've had a break of structure. We've moved below support. And I'm just highlighting up there that it's been a gradual turn. It's a little bit like a cruise liner, in Sydney Harbour. Maybe it takes a little bit of time to turn around. A bit of a triple top forming there above the 110.33 level. And it did give you a final chance to sell up there last week. And we've had a technical break below support now. And we've got two levels that I'm watching for a move down towards. We've got two weekly levels, 107.36. I mean, we could definitely get down to that level this week if we keep the momentum going. We had a very strong sell-off Thursday, Friday last week. So traders, if they're lucky, we might see maybe a rally back up to 109 level. Maybe to get short, but I'm looking for a target down at 107.36 over the next week to 2 weeks. And maybe if we can keep this downside move in play, a retest of the low of the year at the moment at 105.16. So definitely looking a little bit short there on the euro dollar at the moment.
Yeah, and it's going to be really significant if that does happen to play out, of course, just because of the US dollar's huge and important role in the financial system. And then also, of course, what that could potentially indicate if the dollar does appreciate in this kind of risk-off environment. So really, perhaps ominous in a way, technicals there, but one we'll keep an eye on, of course. But let's get to another pair now. And last week was very much driven by the Bank of England's decision, I suppose, from a central bank policy perspective. And well, hikes 25, flagged that rate hikes could continue to unfold from here. But again, seems to have rejected a fairly key level, if I'm not mistaken.
Yeah, exactly. I've drawn in the range of last year here, and I actually thought we may have put in the high of the year when we created a double top at 124.48, but we're expecting hawkish tones from the Bank of England. The market was definitely putting in a new high last week as we're heading into the interest rate decision, but finished on a very negative end of the week. And, we're quite high up within the range of last year. So we're at very high prices maybe for the year. And the technical level there is clearly the double top that we formed earlier in the year, 124.48. That's going to be the level that the market's going to be watching at the start of the week and through the week. So if we drop down to the day chart, we'll have a closer look. We do have a technical break, but we did, excuse me, we did last week break the trend line, but we couldn't close below that 124.48 level. So that's the clear level to watch. Can we get a technical break below there? And over the next week, does that become resistance? Or of course, at the start of the week, it could just remain in support. So that's the clear level to watch for traders. This has probably been the strongest pair to the US dollar over the last couple of months. But a very negative shift Thursday, Friday. So we're definitely seeing a very strong shift to the downside on a lot of these pairs to the US dollar at the moment over the last couple of trading days. So is that going to follow through? If we can hold below 124.48 over the next week, we may start to move down towards the low of the year, which is at 118.41. Well, fractionally below 118.41. That was a false break level. So it's going to be interesting over the next 2 weeks. What happens? Do we see a clear technical shift to the downside? I mean, we could see, as we're talking about the dollar index, have a lot of traders been short, expecting a break of support, and are they finding themselves wrong? And are we going to see some covering of shorts down the US dollar, which of course will make these pairs to the US dollar move down? So yes. That's the picture on the pound at the moment.
That is the picture of the pound at the moment. And again, another one we'll keep an eye on, because again, when we get to these sort of extremes in sentiment, or perhaps everyone's on the one side of the trade, this is where big moves can happen. And, well, this brings into question, I suppose, the Aussie USD, because, well, it's been sort of fairly range-bound recently, despite the volatility of the last, 12 to 18 months. You are pointing potentially here on the daily chart to a double top formation. Again, that's something that's pretty ominous for, I suppose, the Aussie when it comes to potential upside.
That's right. I mean, we've been rather range bound. If we contrast this to the dollar index, well, it's the inverse, but we're a lot closer to the bottom of the range already than the dollar index is to getting to the top. So if that dollar index is moving up to the top of its range, you'd probably expect that we may be breaking below the bottom of this range. So levels to watch at the start of the week, 66.29. It has been support. I mean, we are range bound, but I'm highlighting the possibility there of a double top. Strong sell-off Thursday, Friday. So 66.29 is immediate support. Lower level of support at 65.64. Last week with our clients, I was broadcasting a possible failure up there at 68.05, which came around. So hopefully some of them got short up there. Can support break this week? That's the question. Now, do you think we're going to get another interest rate rise, or do you think we're kind of at the terminal right now? Do you think we're heading more towards cutting rates as we get to the end of the year? What do you think?
Well, I mean, it's certainly priced into the market, isn't it? Right across the globe, which again makes you sort of feel that indicates something a little bit concerning about growth. And if growth's bad, the Aussie dollar tends not to do fantastically. So that's, I guess, my logic there. But let's get another high beta currency chart up, and that's the Kiwi. That's a very significant move, actually, relative to probably the other charts that we have even seen lately. Talk us through this, because this momentum here looks, much more skewed to the downside when it comes to the Kiwi.
Yeah, exactly. On Friday, we had a very aggressive day down after, very similar price action to the Aussie. I think they had their inflation expectations delivered on Friday, just gone, which, inflation in New Zealand is forecast to be a lot lower than what we're seeing on some of the other countries. So even though, where we failed at 63.79, the mid high there, that was when they had that 50 basis point rise, where we were expecting 25 basis point rise from the New Zealand Central Bank. So maybe they're getting to their terminal rate. Inflation is definitely, expectations anyway, are definitely falling, much close to 2 to 3%. So we may see a significant downside move if that's what the market's starting to anticipate. So we've got weekly support down at 61.10 and 60.84. Of course, we could just stay range bound, but a very strong move down on Friday. We may see some follow through to retest support, and can we break down and through? Back in January, we were doing some analysis and saying we could get a 500 pip move down, and wasn't anticipating this sideways price action, but I was looking for maybe a move down to test the low of the year from last year through the course of this year. So can we break support? And if we can, then we could maybe through the course of the year see last year's low tested if they really start to shift maybe to holding interest rates and even cutting interest rates if their inflation really falls down. So we're definitely getting US dollar strength last week. The question will be this week, can we get a follow through? And if we get a follow through, do some of these support levels start to break down?
Absolutely. Watch that space. Of course, it's going to be a, potentially volatile ride. Kiwi always is at the best of times. But a really great overview of the currency market right now. And again, we've sort of eased back into sort of lower volatility conditions in the currency space over the last few months, but you get the sense that we're starting to see some really significant moves unfolding and the return of pretty significant volatility in the FX world. So Duncan, really appreciate you taking us through it to start the week. I hope you do have a wonderful week. Duncan Cooper there from ACY Securities.
Thanks, Cal.